Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody. Today we will take a look at the euro currency finally. So this is weekly research that we have prepared after the long time when we have taken a look on the different currencies. So guys, by looking at the euro currency right now, since we mostly have tracked the euro currency on the daily updates, so in the short-term charts we approximately understand what is going on, and we understand the targets that now exist on the daily chart since we have talked on it just on Friday. But on the longer term charts, on the monthly chart especially, so with this possible big shifts in the Fed policy that was announced last week and have taken the continuation in the current week. So with this possible big shift, potentially it could be really significant patterns on the monthly chart with the targets that stands around 118, 120, 125 area. So these significant changes in a Fed Reserve policy could give to the bulls the new breath that could push euro significantly higher. But right now, since this shift is just possible and because it just have started, so we can't foresee the results. We can't totally foresee what the consequences it could bring. In fact, guys, to be honest, this is not our degree of the scale, degree of confidence. So this is a bit stands outside of our possibilities to foresee such events, to make prediction of these consequences that could follow on these steps. We don't have just the necessary amount of information to make such forecasts. But what we do see, at least by the patterns, by the public information that we could find, so this is potentially bullish for euro currency, and if the patterns that now are forming on the high time frame charts will be confirmed, so that's really could give us the significant trend in the medium term perspective that will let us to relatively safe follow this trend and make the good trades until to the maybe 120, 125 area maybe. So if it will happen as we have suggested in our monthly analysis and also the monthly chart. In the short-term perspective, guys, let's return back to the discussion what really has happened on Friday. On Friday, we've got really not bad numbers. They were positive. We also have got inflation in the wages, so wages also have increased. So that was mostly positive report. But reaction, as you can see, was mild. So market even hasn't dropped below this broken top. It hasn't returned right back down. And that keeps bullish scenario, short-term bullish scenario valid. That really could lead market to the further targets, to the upside. As we said before, non-farm payrolls data has been released, that probably the treatment and the conclusions that market will make based on this report will be a bit gravitate to the negative one. So negative reaction probably should be greater than the positive. And yes, this really has happened because you can see no positive reaction has happened at all. So you can see market hasn't dropped lower, United States dollar hasn't risen. So it's in fact stands at the same time, at the same place. What does it mean? It means that market keeps valid this possible bullish scenario and could lead market to the upside action. Also, what is more important for us is that probably it means that market is not totally priced out the hawkish Fed policy. So why we've got this drop on the euro currency previously? It's because the Fed was preparing the market to possible rate hiking, the cycle of the rate hiking. And on December, it was right here, guys, they have promised, let's call it in this manner, that we will raise rate 4 times in the next year. As year has started, all this time we've got the positive non-farm payrolls released that. So nothing really forecasts some problems. But suddenly, Fed has changed its opinion, and previously they said that probably it will be 2 times, but right now it seems that right now nobody knows how times it will be. So on this way up, we see the reaction of the market to changing of the policy. Here is the promising of the rate hiking, and right now Fed has started to step out from this promising, and market gradually priced out this previous policy. But it seems that we think that it hasn't been priced out totally yet. So market in the short-term perspective still has some potential. That's why on the daily chart we think that we could be focused at least on the 1530 area. This is butterfly target. It's 127 extension, and also this will be, guys, the daily overbought. Mostly we stand on this on possible discontinuation because market, as you can see, holds well above the broken top. So this is a significant moment. Also, as you can see, as reaction on Friday data, market has formed some kind of the high wave pattern, and this pattern usually forms when market stands in decision. So what is more important with this pattern is the top of this pattern and the bottom, because depending on the direction of the breakout of this pattern, market will follow in this way. So that's why we'll be watching for a possible upward continuation here in the beginning of the week. At the same time, guys, we do not expect any deep retracement, any significant retracement, because market right now, as you can see, already stands above the 100% extension of this big A, B, C bottom pattern. D has been completed, retracement to the 618 support. Market right now has exceeded the 100% again, so it stands on the way to the 1618, so 1630 area. That's why hardly market should not show really too significant retracement here. Also, guys, on the 4-hour time frame chart, we have uncompleted the same ABCD pattern that we have discussed on Friday, but market hasn't quite reached it for a few pips. As you can see, market hasn't touched it. This also will be an extension of this most recent swing up. So it seems that maybe some meaningful retracement will happen. It will be perfect if market will show this retracement, but will stop somewhere around weekly pivot point. So it'll be nice. But this retracement probably will happen only after market will complete this 100% target. So around 1450 area. So that's been said, in the very short-term perspective, we think that some upside potential still exists in the short-term perspective, and this target probably is 1530 that we see right now. But in the beginning of the week, we will be watching for first reaching of the 1450 area, completion of this A, B, C, bottom, D, 100% extension, and possible retracement down second. Maybe this retracement will reach weekly pivot point. We will see. But hardly any retracement will start before market will complete this target. So that's the moment that we'll be watching for. After this will happen, we will discuss other patterns that exist right now on the daily chart, and we'll work with those patterns. So let's see what will happen next week.